2nd. Tomorrow's the big day. We've got election night, and the markets are getting ready and they're going wild. Let's talk about the week ahead, and then I'll kind of give you a sense of what's going on right now. So we've got a lot of manufacturing and industrial numbers. By the end of this week, we're going to get a pretty good idea of where our manufacturing and our factories are in terms of production material, basic material, and so forth and so forth. We got construction spending, manufacturing. We've got ADP employment data. We've got international trade in goods and services, which is going to be a big one. We've got employment data and jobless claim. The biggest report of the week, though, is going to be the FOMC announcement, which is happening Thursday at 2 p.m. Eastern time, and then the Fed chairman is speaking. But what's beyond all of that is obviously the election, and that's going to set the tone for Wednesday, Thursday, and Friday. So again, I think all of the reports this week are going to take a backseat to the presidential election. And what I think is going to happen is I think we're going to have a lot of unforeseeability. I don't think we're going to have the results right away. And I think the markets are going to be in panic or in high volatility mode. But again, keep your eye on these reports, because eventually, with time, the fundamentals will catch up with what we're seeing with the market. And again, by the end of this week, we'll have a pretty good idea of the manufacturing numbers and factory orders, which is really important because it'll give us a good idea and a good understanding of how the imports and exports are looking and how much time it may take our economy to get back on track. Because what's the first sector that starts moving? Factory orders, right? Manufacturing. Manufacturing is the economy. Higher manufacturing, faster growth. Slower manufacturing, slower growth. And then we have to see how the demand is from other countries and so forth. And then we've got jobless claims. So we've got a lot of stuff on the table, including FOMC, which should cause a subdued market. But again, I think the overriding factor this week is going to be the presidential election. But as far as the big reports for the week, look for the FOMC announcement on Thursday, jobless claims on Thursday, and employment data on Friday. And no, I'm not expecting anything crazy. We've been between 1 million and 750,000 for 7 months now, and the numbers are going down. They're below the moving average, but they're not going down fast enough. And that's the biggest problem. And if you look at the employment numbers, that's the jobless claims we just went over. Anything below 750,000 is good. Unemployment rate, I would prefer to look not at the number, but the actual percentage. Again, I would prefer the number to be below 7.7, but again, it looks like we're going to be hovering between 7 and 8%. And again, non-farm payroll, look at this, 450,000 to 850,000. It's just telling us that the country doesn't know where we stand right now. So with that said, let's look at the overall market. Let's look at what's going on now, and I'll give you some. Today, I'm actually going to give you 3 small cap stocks. Now, when I talk about small cap stocks, a lot of traders thinking penny stocks, not penny stocks, small cap stocks. Anything with a market cap of under 3 billion, 4 billion is a small cap stock. It's a Russell stock. So again, I'll give you that, but first I want to go through the markets. I want to go through the fundamentals, tell you what to expect, then go through the technicals, show you where the S&P and the Nasdaq and the Russell are, and then I'll get into the stock. So global shares are a little higher now, actually quite a bit higher, on signs of recovering manufacturing in China and Europe, which is huge, though new lockdown measures are going to put a damper on all of this. European reports on industrial output echoed a rise in the Caixin manufacturing PMI, which is really good, a major indicator of China's manufacturing, which showed that domestic demand is holding up. Data for Japan and India were encouraging. And now India has the second highest rate of COVID-19 cases, so I don't know if that's going to continue. But China is looking really good. And we're actually seeing, we're not just listening to them, we're actually seeing what they're saying is coming true because we're looking at the output, and the output is matching the data. So I don't have a reason to believe that they're not being honest with us right now. The gains provide some respite for the markets, with the S&P posting its first back-to-back monthly loss since the pandemic gripped the economy. Despite the improvements in manufacturing, which is the big factor this week, PMI manufacturing, ISM manufacturing, factory orders, we've got a lot of manufacturing data this week. But in light of all of that, U.S. government top infection disease expert has cautioned the U.S. we will have to deal with a whole lot of hurt in the weeks ahead of the surging COVID cases. Fauci said, Washington Post interviewed, that the U.S. could not possibly be positioned more poorly. Oh, man, that's terrible. To stem rising cases as more people gather indoors during the colder fall and winter months. It's happening. It's happening. We don't have good COVID united front. We don't have anyone telling us you got to do it's every state for himself, every man for himself. It hasn't been really that great. And that's one of the biggest reasons why Biden is getting a lot of love from voters. I'm voting for Trump, but again, I'm just showing you and telling you what I'm seeing. In the election, one part of the focus for investors is U.S.-China relations, though it's unclear what change either outcome might bring to the issue. Oh, it's very clear. There's not going to be a trade war if Biden takes the ship. Although Democratic candidate Biden might go easier on tariffs. Oh, yeah, he's going to go easier on tariffs, all right. He's going to... Trade war? What trade war? That's why the Russell has been really strong last few weeks. He's unlikely to soften U.S. policy on other issues such as human rights. Human rights, that's fine. We're talking about technology. Biden is going to say trade war? What trade war? And the Russell is going to have about 15% to gain on that, which is why I'm looking at the Russell. Crude oil, it's at $35 per... Folks, U.S. frackers pay $41, $42 a barrel just to start processing it. So this is really, really weak. And I hate to say I told you so, but all the stocks, look at the weakest stocks right now in the S&P. Energy, 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 energy. Let's see here. Energy. You guys see what I'm saying? Energy. Look at this. I'm not kidding. Look at this. Let's see. Energy. 1, 2, 3. Let's see here. 4, 5, 6, 7, 8, 9, and let's see if we could find another one for good. 10 out of like 30 of the bottom. Folks, bottom picking, you're going to get your fingers dirty, and my fingers are never dirty. All right, now let's talk about the global market. So again, all the cruise ship stocks, the airline stocks, the energy stocks. Remember February and March? Part 2 is ahead. How long have I been saying this? Only for the last 7 months. Don't bottom fish. You're going to get your fingers dirty. It's happening. It's going to happen. It's going to be painful. I'm not kidding. It's going to be painful. If you don't think we're going to take out the lows that we made in February on some of these stocks, I've got something to sell you. All right. Now, let's look at the SPY. The SPY looks like it's going to be opening quite a bit. The Dow right now looks like it's going to open up 400 points higher, I think. Let's see here. 379 points higher. I'm looking at the DIA, but you just have to add a 0 to this or remove the fraction. So we're going to open up higher. But again, even though we're going to open up higher, we are still in the twilight zone between the 50-day and the 200-day moving average. And that's telling us the market has no idea what's going to happen. It really means it's in the twilight zone. Now, the Russell, on the other hand, is already approaching the 50-day moving average. If we have 2 sessions above the blue line without touching the blue line, we are bullish. Now, in the NASDAQ, let's look at the NASDAQ. We are still quite a bit in the twilight zone. So the Russell continues to lead. Now, don't shoot the messenger. I'm just pointing it out. Look at NEE. This is a Biden stock. Didn't really fall off that much, right? How about BABA? Let's look at BABA. That's a Biden stock. Didn't really fall off a lot, right? Didn't fall off a lot. Let's now look at Caterpillar. That's a Trump stock. It's not that bad. But again, the race is going to be very, very close. It's a close election, but I'm going to tell you right now. The smaller stocks, the Russell stocks, not tiny stocks, the Russell 2000, the 1 to 3 to 4 billion to $5 billion market cap stocks, they are going to rally hard if Biden wins because he's going to put an end to this economic trade war with China in relationship to technology. He's going to do it very, very fast. So I don't know if he's going to win, but keep an eye out. Now, I want to show you something, and then we'll get into the top picks. 10 sectors. Technology still holding. Oh, actually, it's not. Consumer discretionary, but look basic materials and industrial. Only what I've been telling you guys for months and months. Technology is no longer in second or third spot. And that's also not boding well for Trump. Material and industrial and consumer discretionary, it means we have to look at household stocks. So I've got 3 household stocks for you to look at today. The Container Store, TCS. Look at the profile of the company. Consumer products, discretionary, Russell 2000. 1-year return, 139%. Gee, I wonder why it's rallying. Consumers are buying. They're eating more at home. They need more containers. The stock is sitting near all-time highs. Not all-time highs, swing highs. These are not all-time highs. It's just coming back on a year-to-year basis. But again, it's looking really, really good right now. I like this. It's bucking the trend. Next one, Tupperware, same principle. I'm very consistent. Miscellaneous staple consumer products, Russell 2000. 1-year return, 212%. Gee, I wonder why. Consumers are staying at home. They're buying stuff for the house. Home sales are up. People are eating in more. Tupperware, look at these rallies. I would wait for a pullback, probably to 26 level on this one, but I like Tupperware. Last one, Bed Bath & Beyond. It's making a pullback. I really like this stock, somewhere between $15 and $17. And again, if you look at this stock, retail, diversified, home furnishings, and it's in the Russell 2000. 1-year return, 39%. So you got Bed Bath & Beyond, Tupperware, and the Container Store. Homes, things for the homes that are not technology focused. That's where I believe you guys should be right now. Now, I've got some really good stuff for you. Don't go anywhere. Folks, I want you to spare 2 minutes a month. I'm sure you could spare 2 minutes a month. Everybody's got 2 minutes in a month, right? Former hedge fund manager Tom Busby, he's been quietly working on a brand new nationwide initiative called America's Income Project. Its goal is simple. I mean, really, really simple. Teach everyday people how to boost their accounts in a matter of minutes using a technique called the 2-minute trade. Who doesn't love the 2-minute trade? If you have a few minutes each month and you like making money like $10,400 in your spare time in less than a month, you're not going to want to miss this. Folks, you don't want to miss this. Learn how everyday folks can boost their account in a matter of minutes. 2-minute trade. Click on the link below. See Tom's generating secret in action. Do it now. And don't forget, the Container Store, TCS, Tupperware, TUP, and BBY, Bed Bath & Beyond. I'll talk to you guys tomorrow. And go out and vote. Go and vote. Whoever you want to vote for, but go and vote.